live streamed, and this is the call to order for the audit committee for the Orange County Partnership, and I have a second.
Yeah, we have a quorum here, so
Quorum.
I'll take roll for you. So we have Greg Peckham here, Melissa Cabuzzi, Nick Carnavazos, and Jason Giordano will be here momentarily. We're going to start with that, and then we have our chairperson, Mary Beth Bianconi, sitting as well, which is great. Staff, Cassie Garcia, and our friends from Acquisition Marketing, live streaming the event, the meeting. Right, so purpose of this meeting, under an authority, every year we have to meet as a committee to review the draft audit with our auditors where the lead auditor changes on a cyclical basis. So we were lucky to have Caitlin this time around. Thank God, she's fantastic. But purpose today is for Caitlin to present the audit to us. We have an opportunity to ask questions, and then ideally the ideal outcome is this committee accepts the draft audit and then advances to the full board for their adoption and authorization for us to upload into Paris at our March meeting. But I will say, audit process with this newish team, new board members, new staff, great with Caitlin, highly smooth. Give kudos to Cassie, who was tremendous in reconciliations and response time. Caitlin was wonderful to work with, and then additionally Lori, our bookkeeper, was great, and Nick pitched in for us as well as a good partner here. But with that, we'd love to turn it over to Caitlin, and we'll start the magic here.
Sounds good. So just before I get started, a little background on myself. My name is Caitlin Poplawski. I've been with the firm Washitz Pavlov for 11 years now, and I've been working actually with the partnership all the way back to 2015. So I'm very familiar with the organization, and we had a clean audit this year, no findings. We like to have a boring audit, as we call it, nothing exciting. So we have nothing but good things to say about the organization. I'm going to share my screen so I can pull up the report. Can you see the report on the screen?
Yes.
Perfect. So I'm going to start with the audit report, which begins on page 1. This is the only part of the report that we as auditors are responsible for, is the opinion letter. And the organization got a clean opinion, the best opinion that you can get. We audited in accordance with governmental auditing standards because you are now a public authority, so we have to comply with the government standards. Nothing's really changed though from before. We talk about responsibility of management for the preparation of the statements. You're responsible for the numbers. And then the next page we just talk about our auditor's responsibilities, which is to obtain reasonable assurance that the financial statements are free from material misstatement, which they were last year. We talk about another report required by governmental auditing standards, which I will get to at the very end, and the public authorities law report on page 3, which I will also discuss at the end of the report. Then I'm going to jump to page 4, the statement of financial position, which is the organization's balance sheet. At the end of last year, you ended cash just under $600,000, which was up from the prior year, which is good. Accounts receivable was just under $50,000, and the majority of that was collected through, I think last week is when we looked at it.
That's right.
So no concerns with your receivables. We had some prepaid expenses, which were deposits on venues for 2026, and a little bit of prepaid insurance. And then the organization has their investments with Charles Schwab, which was a little over $100,000 at the end of last year. Total current assets was $787. And then we had property and equipment, which we looked at. The majority of that is just leasehold improvements to your office space. After depreciation, the net value is just under $27,000. And then we have your leases, which consists of the car lease, which was new for last year, and the office space, and that is around $130,000. On the liability side, the organization does not have any major debt, which is nice. You had some payables at the end of the year, accrued liabilities, which consisted of payroll, and then deferred revenue. Those were deposits received in December for the MVP breakfast next month. So current liabilities was only 108 compared to your current assets of 787. So the organization really is in good shape financially. And then the lease liability, we broke out between the current portion, so that's what's due in 2026, and then the long-term portion. So the net assets at the end of the year was 748. And then if you turn to page 5, this is the statement of activities. Total revenue for last year was 1.2 million, which was definitely up from the prior year. I think the prior year was just over $1 million, so 200,000, which really helped because you had a significant loss in 2024, so the organization had to make that up. So 2025 was a much healthier year. Member investments were 705 at the end of 24 compared to the end of 25, just under $900,000. So the organization really in the past year has grown. We did see a number of new investors. Even event income was up, making up that $200,000 additional revenue. And then your total expenses for the year was $1,057,000, and I have a breakdown further on the next page. So net profit for last year was $180,000, bringing your total net assets from 568 at the beginning of the year to 748 at the end of 2025. So the partnership is definitely looking really good financially. Then we're going to go to the statement of functional expenses on page 6, which lists all the organization's expenses for last year. The majority of your expenses are payroll, which is standard for your kind of organization. Professional fees is a number. But nothing, we looked at expenses, we looked at payroll against contracts. Nothing stood out to us that was of any concern to bring to the board. The majority of your expenses are on the program, which investors like to see. About 80% going toward program versus management in general, which you definitely have. Nothing of concern on this statement. And then the statement of cash flows, this is just a reconciliation of the organization's cash at the beginning of the year, which was 432, to being just under 600,000 at the end of 2025. Then I will go into the notes. Nothing has changed from the prior year on the notes, which start on page 8. Except for we did adopt a new accounting policy, which I will jump to. It's on page 13. This is a new standard that concerns accounting for credit losses, where we can look at your write-offs through the date of the audit report, which we did. The partnership's policy was to adjust the credit losses to be anything over 90 days outstanding, but because you collected the majority of your receivables at the end of the year, we were able to elect this new accounting standard, which just allows us to look at what you collected subsequent from year end and determine what the bad debt write-off should be. Historically, though, the partnership really collects the majority of your receivables, so credit losses is very minimal. Then I will turn to page 14, where we just talked about at the top, the partnership got rid of a car last year. There was a small loss based on what we were depreciating at for $8,000. It's not really a number. Then on page 15, concentration of credit risk. This is something I brought up to Cassie and Connor. At the end of last year, the partnership's bank account was uncollateralized. It was such a small number, $12,000. But I did mention maybe talking about this with Orange Bank and Trust, especially now at the beginning of the year where you have an influx of cash from your investors, just to see what they can offer the organization in getting some sort of collateral for those uninsured balances over $2 million. Then note 8 talks about the lease. The partnership entered a new lease last year for a new vehicle. That started in August and ends in July 2028. And then you'll have the breakdown of the lease liability more on page 16, going through 2028, so you'll see those payments. And then that's pretty much it on the main financial statements. If you turn to page 17, this is the required report for a government audit in accordance with government auditing standards. And it just discusses how we took into consideration the partnership's internal controls when doing our audit, and it explains what a deficiency is. We did not have any deficiencies in internal controls. If we did, it would be reported in this report, but we had no findings. And then to finish off the financial statement audit is the report in compliance with the Public Authorities Law on investments. And same thing, we didn't have any findings. We found that the partnership was in compliance with the law. So overall, a clean audit, nothing concerning to report to the organization. Did anyone have any questions?
But we have a room full of almost majority accountants in here.
Yeah, your tax account.
Yeah,
Right.
exactly.
There's a big difference.
Exactly.
Well, thank you, Caitlin. You've been a pleasure to work with.
Thank you.
Appreciate all your hard work. Thank you.
No questions for me.
Great. Yeah, we've I think that, the revenue of the organization reflects a real commitment and a hustle from this team that has bought into the mission and a new way of operating and really, trying to be as compliant as we possibly can with PARA and kind of trying to find that balancing act to which we're going to have our footing, which is great. But again, all credit to Cassie and the team for really helping keep the ship running smoothly, no doubt.
So do we vote to accept the audit at this point?
So if there's no questions, we would ask the committee to make a motion
Yep.
to accept this audit.
And bring it forward to the board for final acceptance and approval.
Exactly.
Yeah, right, so, motion to approve the 2025 audit report for presentation to adoption by the board of directors.
Second.
Second. Thank you. And motion to approve the annual review of the procurement
And
policy.
then
That's
we'll also
already-
need, so we have a motion and a second on the floor.
Second.
We'll need
All in favor?
everyone else to vote as well.
Okay.
In favor.
Favor?
Aye.
Great.
Anyone opposed?
Boom. 4 ayes, people. Caitlin, thanks so much.
Thank you, Caitlin.
Thanks,
You're
Kevin.
welcome. Nice seeing everyone.
Nice
You
seeing
too.
you.
We'll talk soon.
I don't want to hold up Caitlin, but I'm just curious, what do you classify as other income typically?
Other income typically. In the
Get a word in January, this is not really related to 25.
Excuse me?
This wasn't related so much to 2025, but 26, yeah.
As other income,
I think
This is
other than
primarily,
I
events,
wasn't sure what
and
you
then
classified.
I think
our
another
investor
income
and interest.
on the management financials, I think it's mostly just like the investment activity, the unrealized gains, the interest income.
Was that
the
all that
unrealized
was?
gains.
That's-
I think
okay.
so, off the top of my head.
Clear.
Yeah.
Got it.
It sounds right.
Yeah.
Okay.
But they're good. So in addition to the audit, which is great, so we'll circulate the audit as accepted by the committee and the audit report rather, and allow the full board a month to get their eyes on it. We'll take it out in March. Again, hopefully adopt that. We also yearly need to review and accept our procurement policy and our investment policy, which is commensurate with the public authority law. So I wanted to quickly take us through that. And, simply said, the policies, they're the right fit right now. We'll start with procurement. And, we maintain like semi-regular contact with Millen, our attorney, on this as we try to right fit. And our big expenses tend to be outside of like our operational expenses or event related. So it's audiovisual, it's venue deposits, and then the cost of the venues themselves. So
marketing.
Absolutely, yeah, and marketing as well. And this seems to be the right fit by way of, anything over 10 to 15 is board chair approval, which we can get electronically, and that would be with respect to sometimes AV for the annual event. We'll run around 15 to 16,000, and then we did it for the first time this year. Approval on all of our venues, given the fact that they all exceed, $15,000 all in, so we got board approval in one foul swoop. So this policy works for now, and this, assuming we keep it the same, it doesn't mean we can't change it if we need to, or make it fit in a different way. But I know we feel it's a pretty good fit for now, just given like our limited procurement activity. And then even the AV could fall under professional service, given its like technical nature, and there's so few contractors who do it. So we even have some flexibility in sole source if we needed to. But happy to answer any questions on procurement if there are any.
When you go to a venue for an event, are you required to use all of their own vendors?
So some venues are more strict than others. So we have a long-standing relationship with some, so there's some flexibility, but for the most part, they will require us to use their in-house FW people and so on and so forth. But the smaller events that are QBMs and some ABGs, we're often able to work something out. We can bring in an outside vendor if we have to.
Questions?
So then the action would be to approve this procurement policy as our adopted policy for 2026.
So motion to approve annual review of procurement policy and resolution to adopt.
Second.
All in favor?
Aye.
And Nick, you're on fire with the seconds.
So get my feet on the brakes, yeah, right, just stay on the ball.
And it's a very similar conversation on the investment policy. Again, there was some calories burned on this last year, making sure we were brought into compliance on it. We had a meeting with Focus Wealth earlier this year to talk about effectively mitigating or shifting our risk, which we can still do under this policy. But the broad scope, again, seems to fit well. It's performing generally well, and it's roughly 60% equity, 40% fixed income, which again we can play with. But the shape of the investment policy is, for one, compliant with the public authorities law, but also gives us flexibility to the extent we run an organization that intends to turn profitable in what we do, and it's a core part of what we do. So if there are no questions, I would ask for the same action here. And again, if we need to change this, we can do that at any point in time. It's just an annual, re-upping our policy, so to speak.
Just a quick question. So we're cash heavy now. So how easy is it for us to make a decision to move more money over to Focus under this policy without me reading into it?
Well, it would take a action of the committee, and then likely then a subsequent ratification of the full board. So
Okay.
we could very much, if we wanted to play with our percentages, have another meeting with Focus Wealth, hold a committee meeting, come up with a recommendation, and bring it to the full board again. So we could do that all in a matter of a month.
But when we say a recommendation, like, I just saw where we have breakdown where everything is, oh, you've got it right there, I saw that. So we've got, no, we have 200,000 small, yeah, we have like 250,000 just sitting in energy bank that we could move over. So do
Sure.
we have to have a meeting of focus just to move that over, or do we just decide,
No.
that's just the allocation?
That's right, yeah, we don't need a meeting with focus to necessarily do that, no.
Right.
No, but they tend to provide us with these high-level market reports and
Right.
so on and so forth, but we could make an action as a committee at any time and then present it to the full board.
Yeah, to decide that not to keep so much in cash. So
Mhm.
we've got 250 in cash, I don't think you need that much on hand. We only moved it out while we were going through our transition phase.
Right,
So
right.
it's probably time to start looking at investing that again.
I think so, yeah, I think so,
What do
absolutely.
you guys think?
I think it's a good idea. I think just kind of figuring out, you know, how comfortable are you with operating cash and what that number is. You know, maybe 6 months of overhead, and then from there, you know, why not, like, to Melissa's point, why not have some more cash working for you?
LPM&T account was a fixed income account.
That one
CD
is.
CD ladder, yeah.
We do have 130 sitting there, 200,000 in Charles, and then 107 in checking and 153 in savings.
I don't remember when that CD expires though, because at least as of now, as of the end of 25, you know, it was at 130. I don't know when that expires.
It
Whatever
expires,
that was.
It expired?
September, October, it renews
Yeah, whatever
automatically
term
if we don't
that's
do
on.
anything, but it did expire at the fourth quarter of last year, and we did look into every bank in the county pretty much to see what their interest rates were,
Yeah,
and they're all pretty much online,
Okay.
in line with each other, so,
makes sense.
yeah.
But point being, we have flexibility as a committee to do.
To move that whenever
Yeah.
we decide that we wanna do that. So that we don't need, other than this policy just says you can.
It gives
And
us
this
a framework
is
to
what no one worked on all
I
last,
think
the
we
last quarter
have
last year, so this is
10,
pretty
it's
much.
either 10
yeah.
to 30 days written letter saying that we want to move that money, that's all we need.
That's right. But this is just our framework for operating,
Yep,
and then
sure.
we have the autonomy to make decisions within the policy, but
Yeah.
we can always change it again if we have to.
Okay.
We went over this a few times at the end of last year.
There was a few round robins with mailing on it.
Right.
Yeah.
Right.
It looks like only 10% is what your target is for cash.
Yeah.
Yeah, so we've got,
You
I mean,
got way-
10%, we've got more than that.
You're way over 10, right?
Yeah.
Yeah, very
Yeah.
much, very much.
Sure. 30 to.
But that would be, on the way we maneuver it, we will go back to the ranch, come up with maybe a high-level strategy, and then present it to the committee, and circulate email chain, we always reconvene and to come up with a more cohesive 26 strategy to be more aggressive.
Okay. Yeah, if you could let us know how much cash you feel like you need to have on hand, and the rest of it invest in some way.
We're cash heavy right now.
Yeah.
It's good, first world problems then.
Yeah, absolutely.
I don't mind having extra cash.
Yeah.
It's just make it work.
Yeah.
Right on.
Okay. Then, any other questions, thoughts on the investment policy? Then motion to approve the annual review of the investment policy and resolution to adopt.
Second?
Second, great, all in favor?
Alright,
Alright.
Great, opposed?
any other business before the committee? We're good at the staff level, but anything of interest from the accounting audit world that we should know about? In the macro sense, other than you guys are head down, busy season?
Been very focused on the micro lately.
I get it, I get it.
But nothing to report.
Then I think we need a motion to adjourn.
Yeah, okay, motion to adjourn. Second,
Second.
All right.
All right.
Now we're gonna stay.
All in favor? Okay, good, cool.